Hello friends, welcome. Today we will learn about the term partnership and understand its features. Now before going into the technical definitions, let us understand what is partnership from the layman terms. What is partnership? Now partnership is when two or more person get an idea that let us start some business together. So two or more persons come together and they decide to carry on some business and earn profits out of that business, and that they would share those profits or the losses that arise out of that business. Then we say that they are under partnership. Now to understand this, we'll take a simple example. Suppose we take there are two people, Anil and Sunil. They are two friends. Now they decide that they want to do a business together and they are opening a rice trader shop. So they buy all those grains and the grocery items and they sell it under the name of Anil and Sunil Traders. So this is the shop they have opened. Now, Anil and Sunil have agreed, minimum, there are two people, they have agreed that they will carry on a business. So there are minimum two person and they are carrying on business. So these two individuals are called as partners. So both of them individually they are called as partners and they are carrying the business under the firm name of Anil and Sunil Traders. So this is the firm name and both of these two individuals together form a firm. So this is what is partnership in general. So now that we have understood in very simple terms, now let us move on into the technical definition. The definition for partnership has been given under section 4 of the Indian Partnership Act of 1932. It has defined partnership as partnership is relation between persons who have agreed to share the profits of the business carried on by all or any of them acting for all. So now here we have to understand that we'll split up this definition and understand the definition as well as the features of partnership by analyzing this definition. So partnership is relation between persons. So the first point that we understand here is that there are persons involved. So two or more persons are required for forming a partnership. So minimum how much would be required? At least two people should come together, then only they can form a partnership. And then they said persons, and so we know there are more than two persons also it can be there. So what is the maximum number of people who can come together to form a partnership? Now it is 50. But where is this number 50 given? Actually, in section 464 of the Companies Act. So, in Companies Act of 2013, under section 464, the Companies Act has given the central government the power to fix the maximum number of members. So, central government has been empowered under the Companies Act to fix maximum number of persons who can form partnership under the Indian Partnership Act. And there the max limit has been set at 100. But right now, as per the rules 10 of the Companies Miscellaneous Rules of 2014, this max number has been fixed at 50. So therefore, right now if people want to come together and form partnership, maximum 50 people can come together and form a partnership. So this is the minimum and the maximum number of people who can form a partnership. Now, further, who can become a partner? Anybody who is an individual, he can become a partner. There is no problem. But what is required is that they should be able to enter into contract. So, important point next is they should be competent to contract. So, we need to know that the person who is become a partner is competent to enter into contract, and therefore the provision of the Indian Contract Act would apply, and there certain persons are given as exception. Those people cannot enter into contract. So what is the exception given there under the Indian Contract Act? Indian Contract Act of 1872 has given the exception that a minor, a person of unsound mind, and a person who is disqualified under any law. These are the people who are not eligible to enter into contract. And basically here in partnership, there is going to be an agreement, and person who cannot enter into contract cannot become a partner. Therefore, these people also cannot become a partner. However, there is an exception there too. The exception is with regard to the minors. Minors can be admitted as partners of the firm only to share the profits, not the losses. So in the year in which there is a loss, minor cannot be asked to share the losses. Otherwise, minor could be admitted as a partner. So this exception you need to remember. So from this we understand who are people who are eligible to become partners, and also we have understood the minimum number of persons required for partnership is 2 and maximum is 50. So this was the first feature. Now moving on with the definition. Who have agreed. So the second point, which is the second feature of partnership, is the agreement. So there should be meeting of minds, some agreement. And this is the basis of partnership. The very base of partnership is that people have come together and they've agreed to carry on the business. This agreement can be oral or it can be written. So it is not necessary that always the agreement should be in writing. Even an oral agreement can form basis for partnership, and partnership business can be carried on the basis of oral agreement. However, written is always preferred. Why? Because when there is agreement and it is put down in writing, then you have a documentary evidence. Suppose after having agreed and carried on business for a couple of years, if some disagreement between the partners arise, then under such circumstance, you have a written document available which shows what was agreed upon when they entered into partnership. Therefore, that helps in resolving any sort of future disputes which might arise between the partners. So therefore, agreement in writing is preferred. And this agreement which is in written is called as partnership deed. So this is the document where all the terms of agreement between the partners have been put down in writing. So referring to this deed will give you what are the different things that the partners have agreed. So this is the second feature of partnership, that there should be an agreement. So we have covered the first and the second. Then as we move further, we see that they have agreed to share the profits. So the next feature we can say is the sharing of profits. So when people come together to enter into partnership, they have agreed that they will share the profits. So sharing of profits is expressly stated in the definition. In the definition, you find the term that sharing of profits. But does that mean that they need not share the losses? No. Sharing of losses is implied. Implied means what? Implied means it is understood that when they are sharing the profits, if there is a loss in business, that also has to be shared. However, there is that exception where we saw that minors can be admitted as partners for only in the profits of the business. Minors cannot be asked to share the losses. And further, with relation to sharing of profit, you have to remember this important point that it is not essential that all partners should share losses. The example as I gave you was that of a minor partner or as they have mutually agreed. Further, when they have agreed about sharing of profits, then whatever is the agreed ratio, in that particular ratio, they will be sharing. Suppose they have agreed that they will share the ratio in 3:2:1, three partners A, B and C. Then the profit would be divided in this manner. If they have agreed on 5:3:2, then that ratio shall apply. So whatever is the ratio agreed upon, that shall apply. In case they have not agreed, so there is no particular ratio which has been agreed by the partners, then what happens? Important point here, when either there is no partnership deed where you can find what they have agreed upon in relation to sharing of profits, or if there is partnership deed but nowhere in the partnership deed you find the any particular agreed ratio amongst a partner, then the provision of the Indian Partnership Act of 1932 applies, and there it is specified that they have to share the profits and losses equally. This is one portion where students always have confusion, and when they find that they don't have a specified agreed ratio, they go in for capital ratio, which is wrong. If there is agreed ratio, then agreed ratio applies. If there is no ratio agreed, then they have to share it equally. So this was the third feature that we learned from the definition. Sharing of profits. Now, sharing of profits of what? Of the business. So the next feature of partnership is business. Now basically there should be a business which is being carried on. So what is business? Where an activity which is carried on to earn profit. So to earn profit, this activity is carried on, then that is called as business. Only important thing about this business is that it should be related to lawful activity. So unlawful activity, like if two persons agree that we will do smuggling, then that is not a lawful activity. So the agreement between those two persons to do smuggling is not a business and is not a partnership as recognized under the law. So the only requirement is that the business should be a lawful business. So that is the next feature of partnership. Having understood the next, we'll go further, carried on by all or any of them acting for all. This is the next feature of partnership. So here we are talking about what is called as mutual agency. Now what do we mean by mutual agency? You would have heard the term of principal and agent relationship. So this relationship exists amongst the partners. Whatever is the act of one partner, it would bind the other partners. So when we say a particular partner is a principal, what does it mean? It means that he is bound by the act of other partners. And when we say he is an agent, it means that he is binding the other partners. through his act. So to understand this, let us take a simple example. We'll take, there is Anil, Sunil and Bimal. These people have agreed to carry on business together. Here, Anil does particular act of entering into a contract of purchase. When he does this act, then he is binding Sunil and Bimal. He is binding Sunil and Bimal. So now in this particular stage, Anil is the agent, because through his act he is bound Sunil and Bimal also. He is not contracting for self purpose but on behalf of the entire firm, on behalf of other partners as well. And when Anil is bound by the acts of Sunil or Bimal, then he is the principal. So if any act is done by, so Sunil is the principal in this particular contract of purchase. Anil is the agent because he is binding Sunil and Bimal, and Sunil and Bimal are the principal for Anil because they are bound by the act of Anil. So that is how a relationship of principal and agent lies between the partners of the firm. So these are the main features. In addition to this, there is one more feature that you need to know, and that is of the liability of partners. Now we have already seen that the partnership, they come together, carry on business, it will be contributing capital. And what would be the liability of the partners? The liability of the partners is unlimited. Means it is not limited to the amount of capital they bring in. Whatever is the partnership firm's debt, they will utilize whatever is the partnership assets to pay it off. Then even after utilizing this partnership assets, if the debt cannot be fulfilled, then the personal assets of the partners might have to be sold by the partners, and amount has to be brought in by those partners. So they have to bring in whatever is the balance required so that the partnership debt can be fulfilled. Therefore, the liability of the partner is not limited to the amount of the capital they contribute, but they are bound entirely by the entire partnership debt. So if the debt is, say, of the partnership firm is 20 lakhs and they have settled using the partnership asset, suppose the assets were worth, say, 14 lakhs. So still balance debt which has to be settled is 6 lakhs. Now the 6 lakhs will have to be brought in by those partners. Suppose the same example we take Anil, Sunil and Bimal. Then all the three partners are equally liable. So equally they have to bring in at least 2 lakh each, or one might bring in the entire amount, then he can collect it from the other partner. Like Anil might pay off entire 6 lakh and then he might collect 2 lakh from Sunil and Bimal. So that is also called as joint and several liability. In between the partners, there is joint and several liability. Jointly they are liable for 6 lakh and individually also they are liable to pay off the debts. So therefore, what do we understand about the liability of the partners? That it is unlimited and that in between the partners there is joint and several liability. So these are the essential features of a partnership firm. Now just to summarize, we'll do a few questions to understand the level of understanding. You can pause the video and you can write the answers and then check with the video. Now the questions are like, first, state the maximum number of persons in a firm and where is it prescribed? The maximum number is 50 and where is it prescribed? Under Rules 10 of Companies, Miscellaneous Rules 2011. 14. This number has been fixed. Second, the written agreement amongst the partners is called partnership deed. The agreement between partners can be dash or dash. It can be oral or it might be written. Agreement between the partners is essential, true or false? Yes. The basis of partnership itself is the agreement. When the people agree to do something together, especially a business together, it is a partnership and therefore it is true. The liability of partner is unlimited. Mutual agency of partner means a partner is a dash as well as dash. The principal as well as a agent. Is it essential that all partners should share losses? No. Example that I gave you was a minor cannot be asked to share losses. As a principal, a partner is bound by acts of other partners. As an agent, partner binds other partners through his acts. Finally, the name under which business is carried on is called firm name. So, these are some sample examination questions. Like this, you can get such questions in the exam, and by watching this video, you should be able to answer these questions. So, with that, we come to the end of today's session. If you found this video useful or you liked it, please do like, share and subscribe. Thank you. Have a great day.